Hey traders, in today's video, we're going to talk about finding trading opportunities in a market that doesn't look like it has much to offer. Hey traders, Akil Stokes here, Chief Currency Analyst and Head Trading Coach over at TradingPower.com, and thank you for joining me for another weekend review video. In today's video, I'm going to show you guys some live trading room footage of us breaking down an opportunity in a market that really looked like it didn't have much to offer. And this is something we've been doing all week. If you've been paying attention to the markets this week, you'll notice that there hasn't been too much movement. A lot of these pairs have just been really falling off a cliff, and well, to the novice trader, it may look like there are no opportunities to take advantage of. However, if you go down to your lower time frames, and in this case specifically the 5 range bar chart, you can often find hidden opportunities that may not be too visual to the naked eye. So I just want to give you guys an example of how we attack that, how you can still find opportunities in these trending markets, and hopefully you can come away from this video a little more knowledgeable than you were going in. So as I go down to my lower time frames, again, just kind of the exact opposite of what we did with the pound dollar. I only want to get short. Now the optimal entry would be this. The optimal would be something like the dollar yen or dollar Canada, a move back up into these structure levels, a move back up into this double bottom here. This second double bottom with all these wicks. Look at these wicks. Wow, beautiful. An optimal move would be something like that. We come back into this level. You get stops above this little peak right here. And we look to get short. But as I go down to my lower time frames, I'm looking for short entry, short entry, short entry. So let's see. This is going to end up being another blip as well as we go down. Now, do you guys notice, this is going to be a little tough. Do you notice another area that we could pay attention to that doesn't look like structure now, but will be structure on a lower time frame? Let's see how good your eyes are. I'm seeing 125s, 125s, 125s. I'm looking someplace lower. Here's what I like to look at. I like to create a store. I really like doing this on the daily. There's nothing wrong with the 125 level. Here's what I'm paying attention to, right? The market has been bearish, right? Would you guys all agree? Give me a yes if you agree that the market's been bearish. Yes, 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 yes. Right? So this is a nice level up here, right? But let's look at these candles, right? We got this doji right here. We've got bear candle, a little bit of a indecision right here, right? Bear candle, bear candle. I bet as we go down to a lower time frame, this is going to provide a pretty decent level of structure right here, right? This little pause between the bearish moves. Do you guys see this? Bearish, bearish, pause. Bearish, bearish, pause. Bearish. Who knows what this will be? And again, I'm thinking lower time frame right now. So 240 chart, it doesn't matter, but I'm thinking lower time frame right now. But this is a trick, not a trick. This is something I pay attention to when I look on the daily charts. I don't look on the daily charts for much aside from that bird's eye view of the market. But I do like to look for how each day was, bullish days, bearish days, and look for those clues. And stuff like this will give you clues. These little, I don't know what to call it, hesitation points, I guess we can say. I'll trademark that so no one else can use it. These hesitation points. Some of you know what I did there. Some of you know what I did there. Well, sorry, that was immature of me. I know. It's just so funny. So as we go down to the lower time frame, specifically, I'm thinking once we get down to probably like the 15 and the 5-minute charts, this may be a level that could end up being a nice level for an outside return and a nice level that we can look for potential trend continuation trade. Ooh, I'm recording this too. Maybe it'll go on the internet. Ooh. So let's go down to the 60, right? And you see on the 60, it gets a little clearer, right? You guys see it? Gets a little clearer on the 60. It's not just a single candle. Now it's more of a, excuse me, it's more of a pullback now on the 60, right? If you're looking for trend continuation areas, again, this is the zone that I want to look at for a short. Let's go down to our 15-minute chart. And again, this is all top-down analysis, guys. It's just gaining perspective on the market. And even as we go down to the lower time frame, there's going to be a smaller blip here as well, right in this area. Let's go down to the 5 and let's see what we have. We may have nothing here, guys, but let's see. Now we could use our Fibonacci inversion. I know Greystone's a big fan of this. Look at this. Ooh, this is perfect. Market's in a bearish trend, right? Let me just remind you guys. Market's in a bearish trend, right? We're getting a pullback right here. Look at this overextension on the pullback, guys. You see the RSI here? Look at this RSI. Look at it. Look at it. Right? Market's going overextended. Market's going overextended as we're still in that trend. This is what you're looking for those. This is what you're looking at for those Fibonacci inversion trades. You're looking for chances to get short right here. If you're super aggressive, chances to get short right there. Where do stops need to be, guys? And I'm flipping to a range bar chart as we speak. Where do stops need to be? Come on, simple question. It's easy. Stops need to be above structure. Where's our previous outside return? Right here, right? So stops need to be above this level. Let's get rid of some of these boxes. Targets. Where can we look for targets at? Obviously, there are different ways to go about it, but where's a simple way? Previous structure low, right? Now this one's a little tricky because you gotta get past this area, but previous structure low, let's call it right down here. And then you just ask yourself, well, Akil, what does the risk reward look like? Reward looks like this. Bada bing. Risk above these previous structure highs. Bada boom. You've got a good risk reward there. Now here's one thing I'm looking at. If you have access to the range bar charts, this is a good one. Range bar charts. This can give you a quicker entry into the market. So I'm going to be looking for a lower low, lower close here on the range bar charts. This is where I like using them again. Just gives you a different perspective. We got a nice big, come on, man, I can't grab it. We got a nice big green candle here on the 5-minute. Range bar may give you a different perspective of what this market looks like. So I'm going to be tracking this on the range bar chart, looking for that lower low, lower close, and seeing if I can use that for a reason for entry. If not, we're gonna wait to see how far we get. But the higher this thing, and here's the thing, I don't want to panic. I don't want to panic, guys, because guess what? The higher price action goes, the better. You see what happens here? The better my risk reward. We go high enough, I can even say, you know what, I'm going to take targets off here because I still have that 1-to-1 at a much safer level for target taking. So it's not a bad thing if price action goes higher. Yeah. Okay, yeah, I say if you didn't see it, Jason had a great, hold up, short. Sell that market, let's go. All right, I'm short at Euro Yen on the range bar chart. I'll show you real quick, and I got to get my orders on my other computer as well. We had the lower low, lower close there. Let me just get some stops in real quick. I gotta get this on my other computer as well. Give me 1 second, guys. Hold on. All right, we're good to go. So stops need to be above our previous structure highs here on a range bar chart. I'm not gonna get too risky with stops. I would love, the best place is to have them above 24 even. That's the safest place to go. Let's see where that gives me. 80, 90, yeah, man, that's gonna be a lot of risk. Yeah, we'll get them above 124 even, and I'll just be quick to manage this. But looking for a move back down to previous structure. back down, basically stops above 124, targets right above 123 for these first targets. Second targets, I would let this ride. This is going to be one of those trades where I will be letting those if we're lucky enough to get the second targets, I'm going to let it ride. So we'll see what happens here. Again, I would love to have stops initially right here, about 10 pips above our highs, about 123.90s. But guys, if you're going to be at 123.90, you might as well sacrifice 10 more pips and get at a safer level above that 124 even handle, just because we know how powerful those even handle numbers are. So we'll see what happens with this. We'll do Euro Canada when we get back. Let me just update the syndicate. I'm short. All right, pretty cool stuff, and I hope you guys enjoyed that. For any of you guys that are interested in trading live with me, take a free trial in our live room. You get to stay there for a week. We have a great community of traders. We have a lot of fun, a lot of random conversations, and of course, we make some pips at the same time. Now, speaking of live room, I am not going to be in the live room tomorrow, so Friday. I've got to head out of town for the weekend, so because I'm not sure if I'll be able to do one of my normal trading recap periscopes, I just wanted to keep you guys up to date on how we're doing this year in our trading. For you guys that have been following us, for you guys in the syndicate, you know that we started off the year a little bit rocky. Our first week of trading, we took a pretty big drawdown, a bigger drawdown than what we took during the entirety of last year. But we've been able to bounce back pretty good, especially in these last few weeks. Just to give you guys some examples, the first 4 weeks of trading, Jason Stapleton and myself in the syndicate, we were only hitting at about 46%. Now, win percentage isn't important, but I know you guys like to see the win-loss ratio, so I share it with you guys. Well, since then, over the last 4 weeks after that, we're in week 8 right now, we've been able to hit at 54%, and we've put together a string, let's see, of about 5 positive weeks, putting us at about an 18% return for the year so far. I didn't have time to break down the numbers and compare that to what we did last year, nor does that matter. Each trading year is different. Each trading year, month, week, day is different. So comparisons don't really make a difference there, but we're off to a pretty good start. We're about 2 months in. We're averaging about a 9% return per month. I'm sure a drawdown will come, but we're picking up right where we left off, which is a good sign. So just want to share a little bit of those numbers with you guys. I'm not really big on numbers, but you guys like to hear it. You guys shoot me emails about it. So every once in a while, I'll share it with you guys. So thank you for joining me this week. As always, I'm trying to reach 25,000 viewers or subscribers here on YouTube. So it does me a big favor if you guys, subscribe. If you're new, if you're already subscribed, just hit that like button, share it on social media, Twitter, Facebook, Google+, LinkedIn, wherever you're at, and just encourage a friend to check it out. These are really educational videos, in my opinion. I may be a little bit biased, but the comments don't lie. So if we can help empower at least one new trader each week, then we're doing our job. So I'll see you guys next week. Until then, plan your trade, trade your plan. Best of luck in the markets.